Welcome to The Explainer from Commerce Decoder. If you're in business in India, moving goods means dealing with paperwork. And a big one, the e-way bill, can feel, well, a little complicated. But it doesn't have to be. Today, we're going to break it all down, give you that senior tax consultant perspective, and help you handle it like a pro. So let's get right to it. What's the bottom line? If you are moving a consignment of goods and its value is over 50,000 rupees, you need an e-way bill. Simple as that. It's not optional, it's mandatory. The best way to think about it? It's a digital passport for your shipment. All right, so here's our game plan. We're going to follow the entire journey of a shipment, right, from the start. We'll cover what the e-way bill even is, how you generate it, what to expect if you get pulled over for an inspection, how to fix common problems, and then what happens once the delivery is all done. Okay, let's start with the absolute basics. What exactly is this thing, this e-way bill, and why is it so fundamental to GST compliance anytime goods are on the move? Essentially, it's a digital permit. You generate it on the GST Common Portal, and its whole reason for being is to track the movement of goods. This makes sure every single transaction is accounted for. It's all about transparency, which, you guessed it, is a huge tool for preventing tax evasion. Now for the million-dollar question. Whose job is it to actually create the e-way bill? This is so critical because you have to know this before a single box leaves the warehouse. If it's not done right, someone is going to be held responsible. So, the main responsibility, the buck usually stops with the registered person. That's typically the supplier or the recipient. But here's where it gets flexible. See that? They can authorize the transporter or even an e-commerce operator to do it for them. That flexibility is great, but remember, the ultimate responsibility, that still rests with the registered person. And here is a pro tip that will save you a world of compliance headaches. A really common mistake people make is trying to bundle a bunch of invoices under one single e-way bill. Nope. The rule is crystal clear. One vehicle can have multiple invoices, for sure, but each invoice needs its own separate e-way bill. All right, so the bill is generated, the truck is on the highway. Now, two things become super important. How long that bill is actually valid for, and, of course, what to do if you get pulled over for an inspection. The second that bill is generated, a clock starts ticking. For regular cargo, you've got 1 day for the first 200 kilometers. After that, you get an extra day for every 200 kilometers. But look at the difference for over-dimensional cargo. Those unusually large or heavy loads. The rules are much, much tighter. This means planning your logistics to fit inside this validity window isn't just a good idea, it's absolutely crucial. Okay, deep breath. This is the part that makes everyone a little nervous, the roadside inspection. And yeah, it can happen. But I'll tell you what, being prepared is the difference between a quick 5-minute stop and a day-long, frustrating headache. So here's how it's supposed to work. The officer stops the vehicle. They verify your e-way bill against the details on the online portal, and this is really important, they have to record that inspection online. That digital trail is there to protect everyone and keep the whole process transparent and above board. Now here is a powerful little tool for transporters, so pay attention. If an inspection holds up your vehicle for more than 30 minutes, you actually have the right to get on the portal and report it. It's a key check and balance that's built right into the system to prevent any unnecessary delays. In a perfect world, every shipment would go off without a hitch. But we don't live in a perfect world. So let's dive into how to handle two very common problems. What happens when your e-way bill generation facility gets blocked, and how you can cancel a bill if you've made a mistake. Your ability to generate these bills is tied directly to your overall GST compliance. And the number one single biggest reason people get blocked? It's failing to file your GST returns for 2 tax periods in a row. The system is automated. It will literally just shut you out. So what happens if a supplier gets blocked? Well, they can't generate an e-way bill, and that could stop a shipment dead in its tracks. But there is a workaround. The recipient or the transporter can actually step in and generate the bill themselves. It's a crucial feature that keeps the supply chain from grinding to a halt. Made a mistake on the bill? It happens. But you have a very, very tight 24-hour window to cancel it. Maybe the goods weren't transported after all, or there was a typo in the details. But, and this is a huge but, if that bill has already been checked and verified by an officer during transit, then cancellation is off the table. We have now reached the final leg of our journey. The goods have arrived safely at their destination. But the process isn't quite over yet. the recipient now has a very important role to play in formally closing the loop on the GST portal. Okay, this timeline shows a super critical detail for anyone receiving goods. As soon as that e-way bill is generated, you have 72 hours, or until the goods are delivered, whichever comes first, to log into the portal and either accept or reject the details. And if you do nothing, it is automatically, or deemed, to be accepted. In this system, silence means yes. So after going through all of this, the big question is still sitting there. Is your logistics process truly ready for a random roadside inspection? Because the e-way bill system isn't just about filling out a form. It's about having a disciplined, proactive process from the moment an order is placed to the final delivery. Get that right, and you're not just compliant, you're efficient.